welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is a special edition where our focus is on the Q2 earnings. The company on our radar is Shree Cement. The company has reported a growth of 159% year on year in its net profits to 491 odd crore rupees. The revenue from operations has come in at 4,585 crore rupees, registering a growth of 21% from a year ago. And now to detail some more insights on the earnings and the outlook going forward, I'm now joined by the top management of the company. Mr. HM Bangur joins in. He's the Managing Director of Shree Cement. Welcome, sir, and thank you so much for taking the time out for this discussion. My first question to you would be to help us understand what really led to a substantial jump in the net profitability, and more importantly, would this level and the kind of growth we have seen sustainable going forward as well?
Normally, I will not comment about the EBITDA, whether the profitability will sustain or not. But the operating parameters, the volumes will be definitely better from here, as well as the costing will be in control. Sales price, we really don't know about the future, but right now it is better, and we expect better results in the coming quarters.
Okay, sir. Talk to us about, was this an impact of raw material prices falling in this quarter that you've led to seeing some kind of an improvement on the operational level margins as well? And what's the outlook on raw material prices?
Our raw material is all mining and internally controlled, but the real raw material is only coal, which is fuel. Fuel prices have come down in the last quarter, and its impact will be there till the end of the year, because something is in the pipeline, some contracts are there. So after that, till the March ending, we can predict what will be the fuel prices, and they are in control.
Of cement, sir, can you talk to us about what really led, what happened in Q2 so far? Has there been any price changes? And also going forward in H2, are you looking at any price hikes?
In the second quarter, our prices compared to the earlier quarter was only 1% up. Compared to the last year, it was 2% up. So the prices were not the thing. 10% volume growth is there, which is being... About 12% volume growth is there in the whole year, in the 6 months. And we think it will be continued in the whole year.
So you're saying the total sale volumes increased 10% year on year to about 8.2 million tons this time?
A minimum 12% this year. It may be a little more, but 12% is we can foresee it.
Okay, sir. What about the demand on ground, sir? We are seeing infrastructure activities are picking up. The real estate sector is coming back in a big way. Government spending is on. There is a festive season as well. How are you looking at the demand on ground particularly?
Demand is very good. In fact, the industry is running at a good capacity utilization. And our utilization level is also about 80% or so.
Okay. So it's now 80%, and going forward from here, what is the utilization level that you expect? And are you also looking at adding more capacities now?
Yes, the utilization level should, our volume should increase, but utilization level may come down, because by the year end, from 50 million ton today, we will be going to 56 million ton, which impact will be there in the next year for capacity utilization. Some volume increase will be definitely there.
Okay, sir. So what about expansion plans? Are you looking at any more capacity addition? Are you planning any investments to add more capacities?
Yes, there are few units which are on the project stage. By the end of this year, from 50 million ton, we will be doing 56 million ton. And within one more year, it will be around 62 million ton.
Okay. And on the setting up on the brownfield cement grinding capacity, sir, could you give us a little more detail on the Chhattisgarh space that you're looking at? What is the capex planned here? And what would be the incremental revenue growth that one can expect from this brownfield cement grinding capacity?
Central India is a good market. In Chhattisgarh, we have excess clinker capacity. We are putting up a grinding unit in Chhattisgarh. and which will be costing us around 550 crore. The revenues will be, all incremental sale will be revenue from there.
Okay. Sir, also, can you talk to us about any mergers or acquisitions planned going forward from here? How are you looking at growth opportunities?
We are growing at our own speed, about 12% CAGR for next 2 years. Then it may increase a little. But in the meanwhile, we are not looking at any other acquisition at present.
Okay, sir. So also, can you give us a little more detail on the rising competition in this space? You've been here in this industry for a fairly long time, but bigger players also entering in this space. A lot of mergers and consolidation really taking place as well. How are you looking at this entire competition?
Competition will be there in every business. Competition is welcome. It is only the efficiency which matters. So the efficient player will always be better off in whatever competition.
Okay. So what about the realizations, sir, in comparison to your peers? How are your realizations really right now, and how do you see them going forward?
Realizations will be a little lower, but our EBITDA is one of the highest in the industry. That's what we can say. And realization improvement will be gradual.
Realization improvement will be gradual from here. Okay, so can you talk to us a little bit on your cash position, the debt position right now? How are you placed, and what is your plan going forward?
We are having about 6,000 crore rupees in our bank account. There is almost no debt. Some debts are there on a working capital basis and others, but mostly it is no long-term debt which is meaningful. Small debts will always be there for practical different purposes. Going forward, after 2 years, we will be using part of this cash and the profits to complete the project.
Okay, sir. And any plan to give back to the shareholders the cash on the books by way of maybe dividends, bonuses?
We are giving back to the shareholders normally some dividend, but mostly by way of value growth, capacity growth, without taking debt, without diluting their holding. So that is the biggest gift we will be giving.
Okay, sir. So any plans to perhaps look at stock split going forward from here with the stock prices now around 26,383? Is that something that you've been discussing back in the boardroom?
No, we don't feel much value will be generated by splitting a 100 rupees note into 250 rupees note.
Okay. Okay, fair enough. Fair enough, sir. Well, many thanks, sir, then, for being with us on the show and discussing all the insights from your quarterly earnings. All the very best for the upcoming quarters as well. And here's hoping for more interactions going forward.
Thank you.
All right, and with that, we will wrap up this special edition with Shree Cement right there. EBITDA levels, strong growth right there. Continues to be a promising outlook, especially going forward in the second half. The volume growth may be retained to 12.5% odd is what they are expecting. Also, at this point in time, no further acquisitions planned, no stock split really planned, but the cash position is quite strong for the company. And after 2 years, the company will be looking to invest part of this in the capacities as well going forward too. Well, many thanks for joining us onto this special edition, but do stay tuned onto Business Today Television to catch all the updates from the world of business and stock markets, insights from the top market voices as well as the top corporates of India to really understand how are the companies which are listed on the stock exchanges positioned both technically, fundamentally, and what are the company management's insights as well. All of that up for you on Business Today Television.